Today, we're going to pull back the curtain on something that's, well, one of the most important parts of the entire financial system, but it's one that almost nobody talks about. The stability of pretty much everything you trust in banking. It really all comes down to a single report.
So let's start with a really basic question. How do you actually know if a bank is telling the truth? I mean, you put your money in there, you trust them, but how do the regulators really know that what they're saying about their financial health is the real story?
Well, the answer isn't just about trust or a firm handshake. Nope. The whole system is built on this mandatory, recurring test. You can seriously think of it as a lie detector test that the entire banking industry has to take 4 times a year.
So what exactly is this test? What makes it so powerful that it can keep an entire industry in check? Let's get into it.
It's called the call report. Now, officially, it's got this super formal, kind of boring name, the Consolidated Report of Condition and Income. But what it does is crystal clear. Every single bank in the U.S., no exceptions, has to file this thing every quarter, and it lays out their entire financial situation for everyone to see.
Okay, and this is where the story gets really interesting, especially if you're a fan of database history. You hear financial data today, and I bet a very specific, very modern image pops into your head.
You'd probably think the backbone of the entire U.S. banking system is running on, sleek SQL servers, real-time analytics, fancy dashboards, but the reality, it's a lot more old school than that. We're talking about massive PDFs. Specifically, these FFIEC forms that hold literally decades of financial history. This is not some new invention. It's a foundational pillar of the system.
And I'm not exaggerating here. What we're talking about is the oldest, most consistent financial data set that exists, period. Think about it. Before cloud computing, before we even had spreadsheets, there was this rigorous, standardized reporting process. It's a living history of American finance, captured in these documents. Every boom, every bust, it's all in there.
So, okay, we have this massive historical database, but data is only as good as its accuracy, right? And that brings us to the core principle that gives the call report all of its power, all of its teeth.
You have to understand, this is not just some bureaucratic form-filling exercise. It is a high-stakes confession. When you go back and look at literally any bank that has ever failed, the first warning signs, the little red flags, the beginning of the end, it all starts right here in the raw numbers they submitted on these forms.
There's this fantastic quote from a U.S. bank regulator that just nails it. They called the call report the truth serum of banking, because that's exactly what it's designed to be. It forces a bank to reveal what's actually going on under the hood, whether that news is good or bad.
And if they choose not to tell the truth, well, the consequences are incredibly severe and unbelievably swift. It's a simple, almost brutal process. Step 1, the bank submits its numbers. Step 2, regulators don't just trust them, they verify everything. And Step 3, a bank gets caught lying. Step 4 is the FDIC showing up and shutting them down. The end. There's no wiggle room. So that brings us to what this whole process must feel like for the bankers themselves. For them, it is, without a doubt, a recurring, high-stakes final exam. I mean, just think about the sheer level of transparency that's required here. Every quarter, a bank has to expose absolutely everything. We're talking their complete balance sheets, a detailed record of every single loan they have, every deposit they're holding, and, this is the big one, every single risk they've decided to take on. There's absolutely nowhere to hide. And this happens every 90 days, like clockwork. It is a relentless rhythm of accountability that defines the entire industry. And that constant pressure to prove they're stable, that's what our trust in the entire system is built on.
So the crucial takeaway here is that the call report isn't just about some government oversight. No, for the banks themselves, this is a recurring quarterly fight for their very survival. They have to prove again and again that they are healthy enough to stay in business. Which, of course, leaves us with one last lingering question. This whole system is designed to find weakness, to enforce honesty. But what happens when a bank just can't hide its problems anymore, and it fails this quarterly test? What does that mean for them? And maybe more importantly, what does it mean for all of us?